Welcome back. Oil steadying this morning after dropping below $70 a barrel overnight. This amid growing tensions between the United States and Saudi Arabia. Joining us right now is Lipow Oil Associates President Andy Lipow. Andy, good to see you this morning. Thanks very much for joining us. So what's your take on what's happening in terms of the Saudi situation? Saudi Arabia now the #2 supplier of oil to the United States. Give us your take on the consequences in the price of oil should the U.S. impose sanctions or this issue to escalate.
Well, thanks very much for having me, Maria. You know, what I think is the oil market is actually ignoring the tensions that we're seeing between the Saudis and the U.S. because they feel at the end of the day that the Saudis are not going to use oil as a weapon against sanctions coming from the U.S. And I actually am in that camp because I do believe that the Trump administration is actually trying to, move past this issue with the Saudis while Congress is trying to do something on their own agenda. So I do believe that the Saudis, they do have a public relations problem, but they don't want to add to it by cutting crude supplies, seeing oil prices go up, and then being blamed in addition for that.
Andy, good morning. This is Morgan. So if a Congress does go for some sort of sanctions against Saudi, it would be targeted global Magnitsky sanctions, not statewide sanctions like you see in North Korea or Iran, for example. If the Congress does take some action, and they're noting that there is bipartisan support, how do you expect the market to react to that?
Well, I think actually the oil market will see those sanctions as targeted against individuals rather than the Saudi regime. And as a result, they'll look and say, well, we'll have these targeted sanctions, but the oil market supply won't be affected. I mean, we've seen sanctions against Russian individuals, and yet Russian oil production continues to increase and supply the market.
Andy, it's Dagan McDowell. Is the market fully factored in the sanctions going into place on Iran next month?
Well, I don't think so. I mean, we continue to see sales and exports of oil out of Iran decline. Iran, prior to the sanctions, was exporting 2.5 million barrels a day. Today, they're probably 1.5 million barrels a day. I think that's going to decline further to about 1 million barrels a day. And we do see some tightness in various parts of the oil market, especially for supplies into Asia, where China continues to increase their imports.
Andy, hi. James Freeman with the Wall Street Journal. Wanted to get your take. There's an argument that the U.S. fracking revolution is really all about cheap credit. I'm not sure I buy this, but I'm wondering what you see happening to supply in the United States if interest rates go much higher.
Well, I think, at $70 and $75 per barrel oil, we're going to continue to see supplies increase. The biggest impediment for increasing supplies actually is infrastructure and the lack of pipeline availability to move it out of the Permian to the Texas Gulf Coast. But we continue to see additional pipeline construction announcements so that we'll have a significant amount of infrastructure in place by 2020. And I think from what I see is the producers, the pipeline companies, the traders, the refiners, they're all gearing up for Permian Basin production to increase another 2 million barrels a day over the next few years.
So that would suggest oil should be a lot lower than where it is right now, no?
Well, not exactly, because if I look at what world oil demand is doing, it's expected to be up 1.4 million barrels a day in 2018 versus last year, and another 1.2 million barrels a day in 2019 versus this year. So the way I think about it is the shale revolution has been increasing supplies to meet that ever-growing thirst for world oil demand.
I see.
All right. How long does the ever-growing thirst, sounds like forever, but is there a point where you see oil demand tailing off and some kind of alternative energy making a big part of the market here?
Well, I do believe that's going to happen because the technology for electric vehicles continues to improve, but the sales of electric vehicles in the next few years is rather small to really impact on oil demand. So in my mind, I think the electric vehicle starts making an impact, say, in 2025 and beyond that. But in this shorter term time frame, I still expect that oil demand worldwide is going to continue to grow, because the one thing it does have is ease of distribution around the world.
That makes sense. Andy, great to have you this morning. Thanks so much.
Thanks for having me.
Andy Lipow joining us there.